Good morning, everybody. It is Tuesday, April 27th, 2021. 4 days ago, it snowed in Milwaukee. Today it'll be 84. The world of weather is always interesting and something worth discussing because we don't know how it's going to turn out, but it generally stays in a range. Same thing to be said for the stock market, I think. We don't know exactly how it's going to turn out. We can make a pretty good estimate on what some of the ranges are, and then make our trades near the edge of the ranges. And that applies to selling options. We don't want to sell a covered call when a stock that we have is running and it's not yet overbought. And we don't want to sell a cash secured put until a stock that we are interested in is close to a bottoming process or a pivot back up. So I've continued to simplify the retirement income options article, and it's not quite done yet, but I do have the preliminary here, and this will get to both services, fundamental trends and margin of safety, as soon as we're done with this call. Very short primers with links, some option selling quick thoughts. Really just want you to understand the charts and how I see cash secured puts versus covered calls. And I'm doing a notable covered call option idea this week based on our screening. So if you own any of these 10 stocks, I have a weekly RSI here. So the weekly RSI is overbought on all of these, some more than others. And I would argue that every single one of them is overvalued by at least a little, and in some cases, more than a little. Trim heavily means I think you should sell all of your profits. Trim means I think you should sell a portion of your profits. Covered call against about 2/3 of the remaining position or half of the remaining position. It really depends on how much risk you think you want to remove from your equation and how much you want to ride your winners. These are my suggestions. As I mentioned a while back, I've gotten out of Invesco. Johnson Controls, I talked about and it ran away from me. I know some of you probably bought it. Steel Dynamics, Google, I list here only because it is in fact overbought a little bit, and with earnings, usually it moves a few percent in one direction or the other pretty quickly, and that could change the nature of this relatively quickly if it starts a downtrend. Although I think Google isn't terribly much more than fairly valued. I think it's only slightly overvalued. So I can see this pulling back into the 60s and then resuming back upwards. It's hard to sell options on this because of the share price, obviously. Mosaic, some of you bought Mosaic about the same time you bought Nutrien. Applied Materials is one of the semiconductors that's been running. Blackrock, again, I think you should be trimming this heavily and selling covered calls against any remaining position. I know you like the dividend, but I think this is a stock that could basically make no gains for a very, very, very long time from these prices. Just chop along for literally potentially a decade. Caterpillar, I like it, but I prefer Komatsu. So I think that you should be trimming this and then selling some covered calls. If you don't own Komatsu, that was one of the ones that we looked at a while back. General Dynamics and Goldman Sachs. As I've said, I don't see any reason to own large cap financials. Focus cash secured put trades, put it in the chart form to make it real easy. I am going to have a broader discussion below. I just haven't done that yet. That will come from these charts here, and we'll run through these in a minute. Quidel, Quiddle, on track. Some of these we've covered most of these recently. I want to run through these charts though. So these are all either oversold or close to oversold. And I think it's interesting in the alternative energy space that it does look like it's forming a base. So let's take a look at SunPower. It didn't quite come down to the 618 line, but it's in that half 0.5 to 0.618 area is where it got to. My guess is that it comes back down, then does that consolidation move. So selling a cash secured put on the way down on a down day is probably pretty attractive. I don't think we're going to see this area. I think that the correction in alternative energy is mostly done, and that you probably see some jitterbugging around, maybe one more level down. But as the Wall Street Journal called the infrastructure package, it is the stealth Green New Deal, probably $1 trillion in that direction. And I think this is one of the most desirable stocks out there if you can get a net cost around 30. I mean, ideally we get it closer to 20, but I think that that's probably unlikely. Sunrun, similar chart, already starting to do its basing. Never quite got down to the 618 line. If you take the more recent range, it did correct all the way down to the start. So that tells me that this line isn't that important. This is the important one. Make that a little easier to read. I really like their partnership with Costco. Some of the other things they're doing. I was just doing some car shopping, and I talked to a couple of sales managers. And I said, hey, given that things are going online so much, and you're competing with Carvana now, what do you think the future is of selling other products? And one of the managers knew exactly what I was talking about, and he told me that he expected that his company, which was Ford, would cut a deal to sell solar energy systems. And if you drive around to the car dealerships, I think you can see that they are really streamlining their inventories. Part of that is because deliveries are hard to get right now, but it was happening last year as well as they burnt off the inventory. They had those big sales. You're seeing a lot of car dealerships consolidate from bigger spaces to smaller spaces, again, because they don't really have to keep a lot of inventory. People will come in, test drive something like we did, and say, this is what I want in this color, find it for me or order it. And then somewhere between 2 days and 2 months, depending on what you've ordered, you get your car. This really looks like a pretty interesting consolidation pattern there. And I don't think that's hard for anybody to see. So I would be looking at Sunrun because they're one of the companies that is most likely to cut a deal to partner with a car company. Why? They're already doing it with Costco. So I think that this is one that I think it's pretty clear that this is a sport line. It's hovering around here. That doesn't mean it can't go down on just a bad week in the market or a bad couple of weeks in the market, but I'd be looking for a starter position in here. So the $50 June puts at $8. I think you can try to get those. That would give you a net cost of 42, which is way down here. That would be pretty awesome. All you need is some volatility for that to happen. So if we flip over here to run, we can do this with a whole bunch of these. I don't have the TD Ameritrade up today. It's not that far away, right? You only need it to drop $4 or $5, and then you can hit that put. So when I put these prices here, it doesn't mean that we won't adjust them, but these premiums that I'm looking for are higher in most cases than what we can get today. And sometimes you want to make a trade today, it's perfect. But most of these, you want to look for some volatility, a bad week in the market or bad 2 weeks in the market. What you may have noticed is that as the earnings are coming out, most of the companies are beating on their earnings, but the revenues haven't really gone up. So what they've done is they've streamlined again, cut heads, cut expenses. I thought that they had done almost as much as they could a couple of years ago. They found another level with the pandemic. They took advantage of that. And now with rising PPI, which won't last long, it only lasts a year probably because it's compared to the prior year's numbers. We know that deflation is a longer term boogeyman. What I think you're going to see is that a lot of companies, as their earnings expectations change, especially as they talk about inflation this year, even though it's transitory, I think that everybody knows that. Everybody who really is an economist can tell that the bump in inflation is going to only last for about a year. And then the new comparisons from the prior year will come into effect, and you'll see inflation right back down to 2%. Might get 3 or 4% inflation this year, though. And that'll spook some people. The Treasury is already up to 1.75, 10-year Treasury. If that gets to 2%, you'll have the talking heads running around with looking like bobbleheads. Oh my God, it's 2%. Oh my God, 2%. Most of you are old enough to remember when that was low. I remember when that was low, and now 0 is the new lower bound. So we'll see how the 10-year Treasury goes, but if TLT gets much lower, it'll be interesting to me as the comps turn over how to position a portfolio. Between now and then, I think you get volatility, choppiness, that 2015, 2016 scenario that I talked about, and you can sell a lot of puts. I really think that option selling right now, especially put selling right now, is incredibly attractive as volatility gives you opportunities to sell these dips. To healthcare companies, a lot of these have gone up a little bit in the last week since I first recommended them. Somebody asked about Intel, and I was going to cover that. Interestingly, I don't think Intel has come down all the way to where it's going to get to. I think it gets into the 50s, a little lower in the 50s. And this has to do with ARM and NVIDIA's merger. So I'll just tell you, at some point, I think Intel's going to buy AMD or they're going to merge. Because the technology side of AMD is very good. And if they combine those two product lines into a super product line, and they cut heads, and then they not spin off, but have the part of the company that just does fabrication. They have a fabrication side and they have an R&D side with proprietary products. If Intel and AMD merge, which has been the rumor for a long, long time, they will now compete with NVIDIA and ARM. So you'll go back to having a duopoly in the server space. And then you'll start to get a legitimate competitor in the cell phone space. And remember, Apple's already making some of their own chips. And they're different types of chips. But you're going to see ARM and NVIDIA take some of Intel's market. You're going to see Intel and AMD, I think, merge. So we can get Intel on these dips. And then they have a merger that's accretive. I think it's going to be pretty interesting. So a price in the lower 50s, right? We have some confluence of lines here. One of them happens to be a 618, which is a big deal line, correct? Could it get down to here? It could, because this has been an area where it fought before. So it could get all the way down to 50-ish. But somewhere in the 50s, and we're already almost there, Intel's very interesting to me. Powerhouse balance sheet. If they do some sort of merger with AMD, now that NVIDIA and ARM are getting together, presuming the British government doesn't scuttle the deal. But if the NVIDIA and ARM deal goes through, then I think that Intel and AMD get together imminently. I think that they're already talking about it. I think that they're watching to see what happens. And if they can consolidate their operations now that the market gives them an opportunity with a legitimate competitor, I think you probably see that. And that just would be an amazing company to me. So how does it make sense? That means it's likely to happen at some point. So Intel, with their fortress balance sheets, if we can get it in here, we're going to want it. If they're smart, when they do the merger, they have the AMD guys run the R&D and product development. We'll see. Intel has screwed up some mergers before. I really like this one. So Intel, if it gets a little bit more oversold, you'll probably get that $5 price on the 55. Viacom and Discovery I covered last week. Teladoc and OnTrack I covered last week. AST Space Mobile, we pretty much have nailed that one, correct? We scaled in, we caught a bottom with our second and third scales. I know there's people out there that bought some calls that are up probably double right now. I would take some profits there because it's going to jitterbug around 10 for a while. So if you have calls on AST Space Mobile, long calls, I would take those profits, look for another opportunity on a dip, buy those again. But I think that selling the $10 puts at about $2, you could get $3 last week. I get $2 this week. still a pretty good deal. I think we've seen the bottom in AST Space Mobile. Remember, basically trading up cash value, book value. It's hard to draw a chart for this at this point. It's still relatively new, but get close. So it's probably going to run all the way up to about 15 in a not too distant future. Look at that, the 2618 lines. Well, right, because it wouldn't be there if it didn't fall to that spot. And I think that's pretty interesting. Yeah, I think it's going to rally to about 15. If it breaks out from there, sky's the limit, right? Space stock, sky's the limit. See what I'm doing there? Why I'm doing that? So that seems to be the bottom, right? That's easy enough to deal with. And this confluence of 618 lines, which is relatively rare but incredibly powerful, tells me this is going to break up all the way to here. And it'll test right here. It won't be sure if it's going to break through. So we'll need news at that point. And I understand why you'd want to keep your calls, but if you already doubled your money, at least sell half, because there is some resistance right around 10. But you want to own this stock. There is a possibility that technology doesn't work, but as I've said, I generally want to bet on the scientists, not against them. And it looks like it's going to work, and they have huge backers from the telecom industry globally. If this goes up, if this technology works, this is an S&P 500 company, which means it's at least a 10 bagger from here. And let's finish off with a Jumia. I just want to look at it with you. It's conceivable that we should be selling puts on this, but I just want to introduce you to the company first. We talked about it last week. It does seem to be consolidating, but it's an emerging market stock. For it to shoot down to here would not be unusual. Just understand that you might have to buy it again around 20. I think that you want a starter position here, and actually I should add this to the chart. Probably wants to sell some puts. Again, there's some people I really respect that are high on this company. My research says to be high on it. You can get some pretty fat premiums here. So I'm looking at this chart. I mean, if you can get an average price minus premium down in the lower 20s, that's awfully good. But a price around 30 nets is pretty good too. So 30. And I think you can sell these right now, real honest with you, 26. So let's pull this down to 26. So if you can get a net price of 26, how would we accomplish that? Well, you'd set a $30 price target, strike price, then maybe put that in at 4. I think that's going to be the recommendation. $30 for June with a 4 at $4. I will actually add Jumia in here. Any questions? No? Do you like the format? This is easier to deal with, even easier to deal with yet. Then I'll put some charts under here to make life simple. Yeah. Yeah, charts are nice. They're easy to copy the article and then fill in the new data every week. Yeah, you like that, huh? Okay. All right, learning curve. I'm further along on the learning curve. All right, so everybody, let me do some editing here and finish this article up. I'll get this posted. I'll get yesterday's webinar and today's webinar both edited. I've got some errands to run after the market closes, so between now and market close, this article will be up. Both of the webinars will be edited and posted to YouTube. They will be unlisted for this week, so you'll need to get the links through the chat, and then I'll release them to the public out in the wild at some point. All right, everybody have a great day, and keep an eye on these because I'm really looking for the potential 10 baggers out there. It doesn't mean you can't sell puts on AT&T and Kinder Morgan and Lumen, and I'll throw those in here too for you. But I think that most of you have those positions. I'm looking for things that you don't. And honestly, I just think that once we get these choppy corrections out of the way this year, I think you can see just a mega rally the next 3 years. Just 5,000 on the S&P 500, NASDAQ running up. I think that this is a consolidation year. 2015 and 16 packed into one. Really, it started in September, right? Because the QQQ is not much higher today than it was in September. Everybody wants to talk about new highs. Well, it's been 7 months, for the market to come off the bottoms. And this is a chart that Teresa put in there. But you see this, right? Coronavirus crash comes down. Then from September all the way to the end of the year, the whole quarter to get back to the highs. Then it tested, right? Just recently it tested and it came back off. My anticipation, it would not be unusual for this chart to come back and test right in this area here, right? Somewhere in there is where we're going to test. I for sure. The question is do we break below that area? I don't know. But this is probably where I buy my first little nibble of QQQ, and then we'll see. If it breaks under this trend line, which he outlined, then you probably have a broader correction coming. So we'll see. And in fact, these trend lines are pretty cursory. Probably don't want to go all the way back to here. You probably have to somehow scale this out and pretend it didn't exist. So that means the trend line is probably more like that. From here through these bottoms, probably along that line. Because this is an anomaly, right? That correction is an anomaly because of the pandemic, even more so than this rally. So when you take a look at this is probably where your baseline should have been. Top, imaginary top right in here. So the steepness here is an illusion. That's really not what the trend of the market will remain. That's just a rebound rally. So you have to augment this spike, that decline. So you probably want to use this period here before they started printing money for the repo markets, which was right in here. So this is the repo market stimulus, pandemic, more stimulus. So the normalized trend lines go back further. They have lower points. You have to adjust for that. So the breakthrough here just means that the hyper growth is gone. Then the other trend lines, like I said, are probably in here. I haven't drawn them out. I will. So to come down to here, probably not unlikely. All right. Have a good day.